you could divide crypto into two categories. There's Bitcoin, which is digital property. You buy it, you hold it forever. You're not trading it. It's like buying $1 billion or $1 million or as much money as you have. You're buying a stack of digital gold, putting it in a vault, and you're holding it, except it's better than gold. It's pure digital energy. All the regulation, the clarity is going to help Bitcoin. It's going to be the undisputed winner. Why? Because you don't have to break any law in order to buy Bitcoin and hold it forever. Okay? What are all the laws that you're breaking? Well, if you're trading a security and you're promoting it, it's a pump and dump scheme if you're doing it without a registration statement, okay? So you might be, if you're pushing a security token, you're probably breaking a securities law. If you're trading it, you're probably breaking a regulatory exchange law. You may be running afoul of the CFTC or the SEC, but then there's just the ethical question of, have you disclosed who owns this thing and what your expectations are? If it's an investment contract, you've got fiduciary responsibilities. So I think that the regulation that's coming is it's AML KYC, right? Like who does that affect? It doesn't affect Bitcoin holders at all, right? I mean, like, again, I'm buying Bitcoin, I'm holding it forever. If you implement AML KYC rules on stable coins, it really puts a wrench in the gear of the DeFi exchanges, because the DeFi exchanges are predicated on no AML KYC. As soon as you put in the AML KYC, the question is, why couldn't I do it with CeFi, right? Yeah. So I think that that you've really got three classifications of investments. You've got digital property in the form of Bitcoin. It's simple, it's straightforward, and there really isn't any question, right? How will it be taxed is obvious. You pay tax when you sell it. Don't sell it, right? The obvious thing. And what is it? It's property. Then you've got the big platforms, the Solana and the ETH and and the Cardano and the like. They're all platforms for smart contracts where there's a lot of question about, is it legal? Is it ethical? And how will it be regulated? And there's obviously things people want to do, like DeFi like NFTs. But the issue is, if I sell you an NFT and I lie about or break or change the conditions and sell someone else another NFT, and you bought the first NFT based upon a representation, did you breach the securities law? Right? And there's all sorts of laws and questions. Nobody knows how that's going to work itself out. And the bigger issue is going to be stable coins. Stable coins are money market funds in cyberspace. It's pretty obvious there. I collected the $50 billion and I bought a bunch of credit instruments with them. And if the credit goes bad, you're not getting your money back. The stable coin's going to collapse and there's risk. And the question is, do you have a fiduciary obligation to disclose how you invested the proceeds from the stablecoin sale? Isn't the obvious answer yes? If I sold you $50 billion worth of stable coins and I went and I bet it on black in Vegas and I lost all the money, that's going to be a problem there, right? So I think that it's not that they can't exist, but they have a disclosure issue. And then the other problem is the reason people use stable coins is because they want to move money non-KYC AML. Who wants to do that? Well, people in China want to do that. Why do they want to do that? Because it's illegal to move more than $50,000 in currency out of China per Chinese capital controls, right? I know why they want to do it, right? All the other cryptos, they're giving you massive amounts of leverage. Can you name a regulated exchange in the US that lets you trade 20-to-1 leverage? Okay, well, they are. Okay, so what you're getting in the rest of the crypto world is you're getting 20-to-1 or 200-to-1 leverage on a security token without a disclosure, without AML KYC. Okay, what could go wrong? And what's going to happen? Well, it's pretty obvious what's going to happen. Eventually, there'll be guidance and the security tokens will be treated as securities. And when they're securities, they'll have to be, the US exchanges can't trade them. And then the leverage will leave. And when the leverage leaves, people will unwind the trade, right? And so, the Bitcoin maximalists would say those people are all they're all going to get scammed, right? Because if my token is trading with an $8 billion market cap based on effective 20-to-1 leverage and the leverage leaves and people start to unwind the trade, maybe the $1 billion market cap becomes a $10 million market cap or a $100 million market cap and a massive deleveraging in a hurry. Obviously, the regulators don't want to cause undue harm to the public, but it's pretty clear. The law is clear, right? If you raise money in initial coin offering, and the people that buy it in anticipation of profit based upon the work of others. It's an investment contract, which makes it a security under the SEC 33 Act. It's kind of black and white. So most of these things are security. I think the other thing they've said, by the way, is all the ICOs are pretty much securities, all securities. The second thing is if you have a coin which is staked as a stake token and you're getting a yield on it, that's a security, right? So if someone's guaranteeing you a yield, that's a security, right? There's not a problem with securities, but the point is the entire existing world of finance has securities with disclosures, and you got to have a legal team and you got to file. And what you'll find is when you actually file these things and take the leverage out of them and they start to compete on a pari passu basis with regulated financial instruments, right? Some of the upside, a lot of volatility will disappear, but a lot of the upside will disappear and there'll be a shakeout. There's 6,000 cryptos. There's going to be a massive shakeout. I know the world needs one. How many more than one does it need? We can debate whether the world needs 2 or 3 or 10 or 12 or just one. It doesn't need 6,000. And there's only one that's really proven successful, right? And the rest are speculative. And you could characterize them as venture capital tech investments, and you could characterize them other way. But I think the problem with the technology is everybody talks about all the cool technology, but the real technology is non-AML KYC. When you install AML KYC, then all of a sudden, I just don't see how the technology is any more compelling than what Apple or Google or Facebook or any of the centralized exchanges. High speed, high frequency traders, they have good technology. So at what point does Citadel get into this, or DE Shaw, or some other high frequency trader? I mean, because New York is full of people with good technology to trade stuff fast. So I think that the true innovation is a decentralized digital property in the form of Bitcoin. There is clearly one. That's the innovation. And the chairman of the SEC has literally said that on no less than like 4 occasions. Satoshi's innovation is real. And asked point blank about everything else, he kind of teaches people the definition of investment contract and tries to walk them toward understanding that these things are likely securities in a gentle way and they should act accordingly.